Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from MDM Permian Inc. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Mark Warner, President and Chief Executive Officer of MDM Permian Inc., which trades on the OTC markets under the symbol MDMP. Welcome, Mark.
Thank you so much, Matt. Appreciate the opportunity to present today through OTC and grateful for their ability to do this for potential investors and people that we can work with in the future. As a way of introduction to MDM Permian and Essence Wells, our offering, we're going to show a short 4-minute video that will introduce you to our management team and the Essence Wells program. I'm Mark Warner, President and CEO of MDM Permian, an exciting oil and gas exploration and production company traded under the symbol of MDMP. We believe our company offers investors a chance to increase their wealth, and I'm here to tell you how. We have a $10 million 506C Reg D offering that's unique in that we already have substantial proven assets. 5,000 acres leased in the rich Permian and East Texas basins. We've already raised $1 million. Numerous independent studies show that MDMP's producible formations have over 150 million in recoverable reserves. Our complete group of assets is diverse and contains multiple oil and gas formations. But all of these rich assets don't matter much unless you have a strong management team with an excellent vision, able to make things happen behind the scenes. And at MDMP, we have that. Our CFO, Richard Garza, has law and accounting degrees and has 20 years of experience in the oil and gas patch. He's responsible for the internal review of legal documents and prepares our financials for disclosure on OTCmarkets.com. In the future, he will also complete our audit, which will allow us to come off the pink sheets. Rachel Green, my trusted associate for over 25 years, is VP of Operations and Investor Relations. She's a key member of our management team who frequently helps us win battles in the trenches and is diligent and extremely effective in researching all aspects of the business. Richard Segura is an independent contractor for us and owner of NGU Resources. He has over 35 years experience in the oil patch. He takes the lead on MDMP's asset acquisition. He's also responsible for our interface with the Texas Railroad Commission. As CEO and President, I have over 40 years in the financial services industry, with extensive experience in management, fundraising, and acquisition for numerous oil and gas projects. Our team is committed to serving the best interests of our stakeholders and shareholders. We're doing this through our 506C offering, which will allow us to take advantage of the outstanding recoverable assets that we have under our leases. MDMP will generate income from the production of oil and gas. The company will receive 25% of the proceeds, and the remaining 75% will be paid to the accredited investors. Accredited investors and non-accredited investors alike can purchase MDMP's stock in the public market. At our current share price, increasing our income should have a positive effect on the price of our shares. I believe the 506C offering should be a part of any accredited investor's portfolio. In addition to owning the wells and the stock of our company, I can show you how you can protect your capital while using your dollars twice. So give me a call and join us on this exciting journey. All you have to lose is a great opportunity. So you can see by that video, we have a lot going on, especially with the management team that we have in place that can move this company forward in what I think is a great way. So as we look at the Essence Wells offering, let me give you a little more detail about the underlying assets. Again, it's a $10 million offering, 506C Reg D for accredited investors only. One of the things that wasn't mentioned in the video is there will be at least 17 wells, some in the East Texas Basin and some in the Permian Basin. The use of proceeds of the $10 million, $5 million will be used on what we call the Britain, $3 million on the Lindley, and $500,000 on the Oglesby. We've got earmarked in that $10 million, $1 million lease bank, which is going to be used for additional prospects that we'll be able to secure and produce. And we have those assets in mind and in play already. The offering costs are only 5%. So let me give you a little background on the Britain project. There are 14 existing wells on this location, and there are 3 different zones, and you'll see the several bubbles around here. We have 5 Cotton Valley wells, and if you're familiar with the East Texas Basin, the Cotton Valley is a blanket formation, and that's why all the big companies like Exxon and Comstock are out there playing in the Cotton Valley, and now they have discovered below the Cotton Valley about 12 to 13,000 feet, the Haynesville, which is also a blanket formation. The majors aren't too concerned with the up-dip formations that are available to produce, and we are interested in those up-dip formations. So above the Cotton Valley are Travis Peak and Pettit opportunities. And we also, as a part of this particular project, currently have 49.5% interest in this, the 49.5% working interest, and have the first right of refusal to purchase the other 40.5% from one of the current working interest owners. One of the interesting things is there are potential for an additional 42 wells that could be drilled down into the Cotton Valley on this lease. And for the participants that would participate with us in Essence Wells, they will get a carried working interest in any future wells should they not decide to participate in the drilling of those additional wells. So in this particular formation, we'll rework the existing 14 wells. And one of the things that we're really excited about is the surrounding formations or the surrounding oil fields prove up what we have in our possession. Our particular lease is just south of this lake called Lake Merval. And you can see just from the Pettit production, from one that's just north, and then this is north and west of our particular lease, you can see that out of this particular field, the Carthage field, there was 305,000 barrels of oil and 27 million cubic feet of gas, million cubic feet of gas, or MCF. This one to the north and to the west, 2 different fields combined for 1.3 million barrels of oil and 7.5 million cubic feet of gas. So there's substantial production around this area that is exciting, and the formations that we have and the lease and the well formations that we know of from the logs of the 14 wells that we have Pettit production on our lease. This, one of the things that was mentioned in the video is our relationship with some independent third parties. This is an analysis that NewTek, a very well-respected oil and gas company that doesn't drill, all they do is evaluate wells. This is the type of evaluation that we go to when we look at the individual the individual wells that we have. And this particular new tech evaluation is showing the Cotton Valley on one of the wells that we have out on the Britain. Going to the next portion is the Lindley. The Lindley is actually in the Permian Basin, and there are 6 productive formations. This will not be existing wells, but this will be 2 new drills down about 7,500 feet down to the canyon. And as you drill down to that 7,000 feet in depth, you have the opportunity to hit a total of 6 different productive zones that are found in this area of the Permian Basin. So as I mentioned, 2 new drills. The investors will get 75% of 63.75% of the working interest. And on those 2 new drills, there are 4 additional potential locations in some of these shallower formations as we go down to test the canyon. This is again a new tech log data analysis that's been done, and this is just showing the Clear Fork. So on a 640 acre lease, you have the potential, according to them, just in the Clear Fork zone, 1.7 million of recoverable oil and gas or oil assets. And that is a 20% recovery, which on a 40 acre lease, which is what we're producing off of or what we'll drill on, they're estimating just off the Clear Fork 110,000 barrels of recoverable oil. And multiplying that by $65 to $70 will produce a substantial amount of revenue for us as well as the investors. The next portion of our investment will include the Oglesby. The Oglesby is very close to the Lindley. It's in the same formation in the Permian Basin, and the canyon's already played out on this particular well, but we have the opportunity for 2 up-dip formations to produce in the San Angelo and the Sprayberry. The San Angelo is about 1,600 feet deep, and the Sprayberry is about 3,000 feet deep. So we'll come up the wellbore and look to see if we can produce out of the San Angelo and the Sprayberry. According to New Tech again, on the Oglesby, we're looking at on a 40 acre spacing just out of the San Angelo formation, and based on their analysis of the log, there could be 111,000 barrels of oil recovered out of the Oglesby. So if you just take our San Angelo on the Oglesby and the investment on the Lindley in the Clear Fork, we could produce out of 3 wells over 300,000 barrels of oil. Multiply that times $65 or $70 and we'll produce a nice revenue stream for the investors who participate with us in these particular wells, not even counting the Britain wells. So with all of those 3 different opportunities, without the lease bank showing any income in this, in the anticipation of the various formations that are available to us in those leases that we already have secured, we're talking about in the 1 year from the start of production from those wells, that the oil will produce about $7.5 million based on a $70 price per barrel. At a $3.50 to $3, depending on the liquids that are contained in the gas, we're anticipating $9 million of revenue, gross revenue from the gas production. So what does that mean to the investor? So gross revenue of $16.5 million. And again, this is not procuring the other 40% from the Britain, from the other working interest owner, although that particular working interest owner is very motivated to sell, and we're in discussions with them now. But with just having what percentages that we have in there and based on producing at those rates, the gross revenue is 16.5 million. The net revenue to investors after 1 year of production would be about 5.2 million, or over half of what has been invested. And if we're only 75% right, then you would generate 4 million on your, if you put the whole 10 million in off of those leases. So we're excited about what we have here. The one thing that you don't notice in here is any ownership of our stock. For the participants in the Essence Wells, there is no purchase of our stock. If you're interested in purchasing the stock, if you're qualified to do so, we would recommend that you buy it on the open market. And then you would have the opportunity to get 2 bites of the apple instead of just one. So we're excited about the opportunity to develop some relationships here, new capital relationships. We have other assets that I've mentioned based on the lease bank. And if there are investors on this call that might be interested in developing a relationship outside of our Reg D offering, we are open to visiting with you about those various opportunities. So, with that being said, we thank you for the opportunity to present a 30,000 foot view, our offering called Essence Wells. And I'll now open it up to questions and answers. So one of the questions is, it seems that the Reg D will not be dilutive to the public company. Is my understanding correct? That is absolutely true. We are very sensitive about our current common shareholders, and making this offering the ability for MDM Permian to generate some really nice revenue. And as you know, driving revenue to a public company should have a very positive effect on the value of the stock. But we're extremely sensitive not to dilute our shares. We'd rather do a Reg D offering than a Reg A offering, especially at our current price of our shares, just because we would have to dilute our current shareholders who have got us to this point in a substantial way in order to raise the capital we need to get the oil and gas out of the ground that's available to us on these leases. So next question. What is the expected revenue that MDM Permian, the public company, will generate when the Reg D is fully funded? Out of the gross revenue and based on our share of the revenue that was illustrated, the 16 million, MDMP or MDM Permian should generate about $1.8 million. And of course, that would be ongoing revenue from any of the wells that would be producing. And this is not our last rodeo. We have several other prospects that we want to develop this way. And the more we have, the more we'll be able to generate. And out of the revenue that we generate, the anticipation is that we would take more and more participation in these types of offerings, which, by the way, we already have about $250,000 of our own money in the Essence Wells. So we're putting our money where our mouth is. Let's see. Another question here, are the 14 existing wells currently producing? Yes, there is some minimal production that's going on, which is obviously important so that we can hold the leases. The next question, can you explain the difference between investing via purchasing your shares versus participating in the 506C? So yes, the 506C is for accredited investors that will participate specifically in the 17 wells and in the lease bank. There'll be no participation via Essence Wells in the stock. If you wanted to have potentially two bites of the apple, then you would have to separately purchase stock in the public market of our stock, the MDMP. Great question. The next question is, please comment on the 10% of proceeds earmarked for the lease bank. As I mentioned, again, at a 30,000 foot view, we have other leases that we have a participation in that we want to exploit. And the last $1 million that will be raised will be earmarked to going and taking advantage of these leases that we have and allowing our investors in Essence Wells to participate in that lease bank. There's no income that's projected out of that lease bank, but based on what we know of the leases that we would be targeting with that lease bank money, there are some substantial reserves under those leases as well. Great question. Thank you. How will you flow? The next question is, how will you flow returns to the shareholders? So as soon as the revenue starts, our anticipation is that we would pay out quarterly the revenue stream to the investors in the 506C. There are no dividends currently out of our stock, if that was one of your questions. But we anticipate that as the income comes in, we would be distributing that on a quarterly basis. The next question is, what is your cost of production extraction for the oil and gas wells? Great question, and it's based on the difference between reworking a well and drilling a well. One of the things that we're really excited about is the 14 wells that are on the Britain are already existing well bores, and all we have to do is go in and perforate an upper zone from the Cotton Valley. And there's a bunch of equipment that needs to be upgraded and improved. And so based on the cost, it's different for the Britain than it would be over on the Lindley. When you drill a new well, we anticipate drilling down to about 7,000 feet is going to cost us about $1.5 million per well. Whereas on the Britain, that $1.5 million is already spent by somebody else, and we're taking advantage of the existing wells. Next question. I would assume with the 1.8 million in revenue for the public company when the Reg D is fully funded, the public company could potentially post significant net income. That's absolutely accurate. Out of the 1.8 million, our operating costs are probably about $40,000 a month. So we could have a substantial income off of the 1.8 million that we could show to the bottom line and again drive the value of our shares. Another question is, how will you flow returns to shareholders? The returns to shareholders, if you're talking about the interest in the public stock that we have for MDM Permian, the flow of returns to the shareholder will just be a price appreciation on the value of the shares that you own. We don't anticipate doing any dividends because we're going to retain the income that's generated to go out and participate in growing that income by doing additional wells and taking a larger participation in those wells to drive the value of our stock. I have a current position in the company, and I'm more interested in 20 times earnings than earnings, but we need earnings to get to that 20 times earnings. So this is our way of not diluting the stock holders that we currently have and generating revenue to the public company driving the value of the stock, while at the same time, the people who participate in our wells will generate some nice income. And I haven't even mentioned the tax write-off that's available to those who participate in the Essence wells. We anticipate that there'll be somewhere between 70 and 80% of what you invest that you'll be able to write off against your ordinary income for some tax shelter benefits. And again, those are not even factored into the rate of return. All right. What are the underlying assets and cash flow supporting the stock? We took over the company March of 23, and our interest was to go out and acquire assets that could then be used to produce as much income as we possibly could to the stakeholders as well as the shareholders or to the public company. And those underlying assets need the capital, which is why we've done Essence Wells, to start drawing that oil and gas that we know sits underneath our leases and generate the revenue, not only for the investor in Essence Wells, but to generate revenue to MDM Permian. I hope that answers your question. And I might mention that we have the opportunity to do one-on-one meetings subsequent to this, and we can get into more salient detail for you on some of these questions that I may not be answering from a 30,000-foot view for you. The next question is, what project do you plan to start on first? The lowest hanging fruit is the Britain project. We have the opportunity to do a bunch of surface equipment and some minor tweaks to the wells themselves. And by doing that to the existing wells, we could generate some substantial revenue stream to our company. And that's where we'll start. There's very little cost. We'll probably spend the next dollars on the Oglesby. And then once we get the capital in the door, that's when we'll drill the wells out on the Lindley. The next question is, who is MHG Associates? MHG Associates is a group of 3 people, including Rachel Green, Greg McKeever, and Jeff Hobbs, who are very supportive of our company. And they are co-managers of the offering and helping us in raising the capital needed for Essence Wells. Let's see. What are the underlying assets and cash flow supporting the stock? The underlying assets that we have currently is the leases that we've secured since March of 2023. And again, the cash flow supporting that has mostly been from very minimal sales of oil and gas based on what needs to be done to the leases that we have. But in addition to that, we Fire Dream, which is the majority stockholder, has been supporting the cash flow, not from a purpose of buying more stock, but to carry the operational costs until such time as we can start generating the income. In addition to that, one of the things that we have done, which we're very excited about, is we've secured some equipment that is out there working on other leases. We have a very qualified crew that is using some workover equipment. And when that equipment is employed, we're generating on average about $3,000 a day in gross revenue. And we have over $150,000 of receivables since we've employed that strategy. And we have about a 35% gross margin. So it looks like we're getting close to the end of my time. I have about 15 seconds left. Thank you for your time and attention and your interest in Essence Wells and MDM Permian. We're excited about what the future holds for our company. Thanks again for attending.